Hey guys, David Robinson here. Welcome to the apartment investing journey. I've got a special episode today. I'm really excited about having my friend come on and talk about his vast real estate experience and the journey that he's been on over a significant amount of time. And what he's done in the space is really impressive. And so I'm really excited to have Jason Perro on the show with us. Jason, appreciate you coming on and spending some time with us.
Thanks, David. Thanks for having me, and I look forward to our conversation today.
So Jason is the president of Perro Real Estate, which was founded in 2001 with his wife, Nadia. Jason owns and operates over $140 million of real estate assets. Located primarily in Erie, Pennsylvania and Cleveland, Ohio, his portfolio is comprised of over 2,000 multifamily rental units. And so, Jason, obviously a very brief bio. There's a long story behind how you go about accumulating over 2,000 rental properties. So let's back up. If you don't mind, our podcast is all about the journey. And so we want to understand sort of what this progression has looked like for you over the years. So back up and tell us, where did it all start for you?
Sure. It all started with, growing up without a lot of money. We weren't poor, but, I never learned about money. I had jobs, growing up, and as long as I could remember, I was always working. If I wanted something, I had to buy it. So we were fine, kind of regular, lower middle class, whatever, but went to college and I started doing internships and thinking about my career. And I had some internships with financial planning companies, and the planners would have me go through their client files, set up appointments with their clients, people that they hadn't seen in maybe a year, and things like that. So I was really curious because I'm like, oh wow, these are people with money. I'm setting up these these meetings with their customers, and I there was one file, and I've mentioned this at various times over the years, but it struck me so it was so impactful that it was a dual income family, husband and wife. I don't remember who was who, but one was a physician, one was an attorney. Combined income well over $500,000 a year, and their net income or their net worth was a few $100,000. Nothing to sneeze at. But I'm thinking, man, you make $600,000-$700,000 a year. Like, what the heck? You should have a little bit more net worth than that. And the next thing, I went through several files later. There was a client that they had that was a school teacher or maybe a secretary, and maybe combined they had $75,000 or $80,000 a year of income, but they had this, ridiculous net worth, what I thought was ridiculous at the time, of like $5 million. And like, how is that possible? How is that even possible on $80,000 a year? Well, of course they invest and they have their IRAs and things like that, but tough to get their loan. But the brokers are like, oh, well, they own real estate. We don't really have anything to do with that. That's just part of their balance sheet. And then the light bulb went off, and I'm like, oh man, so I picked up Rich Dad, Poor Dad, the millionaire next door, which is like, totally correlated to that school teacher and secretary. But just started learning about how people build wealth. And that was like really the start of the journey. And so everybody I talked to that had money was like, you got to get invested in real estate, save up your money, buy a duplex, buy something, start buying real estate. And everybody who I knew that wasn't wealthy would say, you don't want to be a landlord. You don't want to invest in real estate. You're going to have to deal with tenants and toilets and all this stuff. And I'm thinking, yeah, but I could build some wealth. And I didn't think I knew any millionaires at the time. Apparently I did. I knew some millionaires next door, but that seemed like a really cool idea when, I hadn't been exposed to much in the way of wealth building, how to save and invest early on. So that seemed like the path. And so the first, my wife was still in college at the time. I was fresh out in my first job, and I was saving up. It was like the first $3,000, $3,500 I saved at my first job. I bought, we still rented at the time. We bought our first duplex, still rented. We bought a duplex, and then, my wife graduated college, started working, and we really we didn't see any other path other than just going all in with our money. And so we're used to living on rice and beans, frozen pizza, all that kind of stuff. So we just pummeled away one person's salary into buying real estate for about an 11-year period. So starting in 2001 through 2012, we just invested as much of our own money as we could into building our business. And so we had all these properties that we owned ourselves. I mean, with debt, of course, but we owned all these properties and did that kind of like the old fashioned hard way, just living well below our means and saving as much as we could. And then we really didn't start doing creative things using hard money until I left my day job. My wife had already left her day job, but I kind of jumped ahead in the story, but that's, we just did it the old fashioned way, just kind of grinded it out. But we were in our, 20s and early 30s, made total sense. I'm glad we did it that way, because that set like a really solid foundation for what we got into after that.
Yeah, and I love that story. And as I've had a chance to interview a lot of very successful real estate investors, everybody has their own path and how they get there. But there's a theme that I've found, that the individuals who start off buying their first primary residence as what we now deem a house hack, or where they buy a multifamily property, they live in one unit and rent the other out. It's incredible the trajectory that puts people on. And I think it's less about the financial impact that has early on, and more about the mindset that they have. And they start to recognize, my goodness, there's a path forward this way in generating cash flow through investment property versus going and buying, depreciating, items, right? So, do you feel like that first decision to buy that duplex had that type of impact on you?
Absolutely. I mean, my wife and I will often talk about, our friends at the same time who were doing okay financially, in their early 20s, that maybe kind of got into the right careers and things like that. They were taking the fancy vacations. They were, buying nice cars, bigger houses than they probably should have had in their early and mid 20s. There's nothing wrong with that, right? Like if you
Sure.
want, material items, that's great. Whatever you're into, so be it. But I think for us, it set this path forward of, hey, this first duplex, paid for my student loans at the time. And the next duplex was the next student loan. The next quad was maybe my wife's student loans. And then it was, oh wait, then we have this money that we're earning that we can put into our 401k and our IRAs and things like that. But yeah, it was a total mindset shift about buying things that will cash flow to pay for the life we wanted. And, early on, I mean, really didn't think big enough. It was, man, if I can just get 10 duplexes, wow. I mean, I'll be
Right.
on my way. But for, a 24-year-old at the time, there was annual incomes that I thought I would be set for life if I could just get to that number. But, your tastes change, your lifestyle maybe changes, the kids and everything else changes the equation a little bit. But it was the right, for me, it was the right track and the right mindset. And I think when I get into discussions all the time right now about what to invest in with, people. And I still, for me, my investment model, my criteria is a hard asset that cash flows. And, and maybe I'm left out of certain things that are cool and different and everything else, but I just know that I can't go wrong with something that I can physically see and touch that produces income. It's just those types of things have proven resilient and oftentimes very boring, which is what we want as investors, over a 2-decade period. So as I look forward to like the next 2 decades, I think that those decisions early on of buying things that generate cash flow, that decision is very forgiving even when you make mistakes. So
Yeah.
what that does over 10, 20, 30, 40-year period, that can build a great amount of cash flow, build a huge war chest, build wealth, for your current generation, future generations, whatever it is that you're aiming for.
And I want to touch base a little bit on, what you were doing professionally in this time of your life, the early stages of your investing, when your wife maybe is still going to school. You had started doing some internships. That's how you were exposed to, this concept of real estate investing. What did you do professionally early on? Because I know, and we'll talk about, your brokerage and property management business, but what were you doing early on?
Yeah. So I initially got into pharmaceutical sales, and that had a lot of flexibility. So I was spending all this time either waiting in doctor's offices or, wrapping up, early afternoon or something like that, and spending time studying, learning this business. And so my wife had, when she graduated college, she got into pharmaceutical sales, did that for, I don't know, 5, 6, 7 years, something like that. And I, after a few years, I got into medical device sales. So I was in the operating room selling devices and technology, to surgeons that they would use in procedures. And it was a high pressure time, a lot of demands on our time, but the financial rewards are great for, they'd be great for an older person, but they were great when you're in your 20s and 30s. And so I was able to make a bunch of money, and just kept pummeling that into real estate. So, and again, we started to ease up a little bit and learned, let that cash flow build on itself. But, it would be funny. I would drive 60, 70,000 miles a year. So I'm listening to audiobooks. I'm on the phone, just talking real estate, learning real estate all the time. If I was at a hospital and I've got 2 hours to kill before, surgery gets delayed, I'm on my laptop looking at houses and looking at investments, and then, spending a little time, the time I needed to be successful at the job. But I had that flexibility of, I wasn't just like in a cubicle in the four walls of under somebody's thumb. So there was a little bit of freedom and flexibility, even though it was a very, had high demands on our time.
Well, and today you guys have built your own real estate empire here, but I'm curious about, that progression. So if we move that forward, when was it when you started to go all in on the real estate side of things and leave that, the medical device sales and all that? Because you and your wife have both exited that side, that corporate sales side. Is that correct?
Yeah, absolutely. Yeah. Okay. We've been full-time in this business since 2012.
Okay.
No outside, no corporate jobs, just working for ourselves.
And maybe just for our listeners, give them a sense of what your business looks like today.
So today, roughly, we're invested in about roughly 2,300 units, of which about my wife and I own about 650, 700 units ourselves with no partners or investors. The rest of it we've syndicated, Western Pennsylvania, Cleveland, Ohio. We're in some things in Oklahoma, Texas, some other markets as KPs. So that's kind of fun, when you get into the syndication space, you can kind of grow and have part ownership of, some really big, exciting asset. But, we our primary business, what kind of puts food on the table day to day is that the running our own properties or the properties that we syndicate that we're involved with locally. So Erie, Pennsylvania, Cleveland, Ohio, we manage those. And that's something, we bring to the table. Like, it's a hard business. Property management can stink at times. Tenants don't always call you. Some do, some are great. And they'll call you and thank you for the good things you do. But it's, there's people that have just such unrealistic demands. It can be a challenge at times, and that can beat you up mentally. But the flip side is when you do get those tenants that really do appreciate the hard work your team puts in. So we have everything from, people that are on site managing a specific property or two to, a team of maintenance guys that just are scrambled around handling, a series of properties. And we've largely gotten out of, all of our smaller properties. We still have a handful of them, but we have a full office staff, full team of maintenance personnel, a full Rolodex. I don't even know if a Rolodex is, contact list.
You're dating yourself, Jason.
You're dating yourself. The gray hair. What era I grew up in.
Yeah.
But a contact list of contractors and it just becomes a full-time thing. So we're managing, about 1,400 plus of the units right now that we own. And, but I prefer that because ultimately I've said it, it's not entirely true, but in a lot of ways, no one's ever going to care as much about the property as the owner will. Now, if you have a group of owners, I think that, you and I have partnered up with another partner on a deal. And I think that generally the types of people we would partner with are the same people that take that ownership. Like, hey, if something really bad happens, it's our names on the line. It is our reputation with the tenants. It's our reputation with investors. And so if especially like during COVID times, property managers are sick, they're out with COVID, so they're quarantined for 2 weeks. Well, the train doesn't stop because somebody has COVID. So guess who's, screening leads or pitching in to handle maintenance calls. And I think that's what you get when you have a partner. I think that is an owner as well, or a property manager that is an owner, because ultimately they know what it takes to get the job done. And that's in no way meant to criticize third-party management. There's a ton of amazing ones that we've encountered, but for something that we deal with close to home, we're just, when we have a team that earns their paycheck through us, we know that we can affect that change. If we need to make a change on a property, change on personnel, we can do that stuff real time, which ultimately maximizes profits, takes care of the tenants in the property in a better way, and everybody's happy.
And so you've got, and so would you say that's your core business outside of investing? That's your core business, is the property management side. But if I understand correctly, you also have the brokerage connected to the property management business. Is that not correct?
No, I'm not a broker.
Strictly property management.
Well, even that, we don't do any third party management. We only
Gotcha.
Self-owned property. So really the core business is taking care of our assets. So we had thought about getting into third property management, had put our toes in the water in that a few times over the years, but quickly decided that after the second or third go around with that it really wasn't like a huge, profit margin type of business.
Mm-hmm.
So, it can be when you run your own properties, but yeah, we don't really take on any third party. If I were to do that, I would want to be an owner. So that's a different type of conversation. You want to manage my property? Well, sure, but I want 30% ownership of your property, please. And having that type of conversation. So really the core business is buying assets that cash flow and then hiring people to help us run those properties well.
And so over the last, you mentioned, you and your wife built up a significant portfolio, over 650 units that you own entirely yourselves. And then the remaining 2,300 roughly, you've brought partners in. What have you learned about investing yourself versus investing with partners and raising equity for deals and doing larger deals? What are your thoughts about both sides of the spectrum?
Yeah. Well, first I'll say I love both sides. 10 years ago, you probably wouldn't have caught, I wouldn't have been caught dead saying that I like partnerships. I just couldn't wrap my head around it at the time. But I've learned that, partnerships can be amazing if you have the right people and people that complement your skill sets. And so syndicating and doing joint ventures and having some various partnerships has been great for the properties that I also own individually with my wife. I've learned from partners that we have that, oh wait, maybe there's a better way of doing things. And I can apply these same principles to my self-owned properties. There's something to be said for, looking at a property and saying, yeah, I own this 100%. It's just us. But there is something very nice to know that, hey, we can grow much faster by having a team together, that whether it comes to raising money from investors, somebody who's maybe really strong in analyzing the deal, or someone who's really strong with, working with a lender and deal flow, and then collectively that team working together to asset manage and kind of set the game plan, the business plan for the properties. Those types of skills then get you thinking a little bit differently about your own properties. But then having managed your own properties, you can take, there's just countless scenarios that come up every day from tenants that, hey, this is how I handled this. This is how I handled that. But when I'm in a partnership, whether it's local or 1,000 miles away, I can always put the hat on of, if we have a property management company, and say, well, how would I run this? Right. And so if they're doing something that I don't agree with, or that it's maybe different, it's something I can learn from and say, oh my gosh, they're doing this, and it seems like such a better way of managing things. I can take those skills and just apply them immediately in our business. And so it's been been huge for us, just kind of opening our minds and trying to expand, the way we think about deals and how we partner with people.
And would you say that today you lean more towards doing joint venture deals or syndication deals, or acquiring your own individual property, maybe, exchanging what you currently have and rolling up into larger assets? Sort of what's your philosophy about, how you and Nadia move forward from this point? I mean, you've built something incredible already. What does one do at this stage to, push things forward, if you
Sure.
even want to do that?
Yeah. I mean, I just actually sat down over this past weekend. I kind of, in December of every year, I've started planning for my next year and seeing what that looks like. And, we're having a lot of fun with these various partnerships we're involved with. And so putting time and energy into those, growing in other markets, that's a lot of fun. And I get a lot of fulfillment out of that. Like that growth, doing the deals is fun, but also, like helping others grow and partnering up with individuals that, we can see their trajectory and help them out along the way, is a ton of fun. So really enjoy that. But then, when we look at some of our existing portfolio and we're like, man, we've owned this property for 19, 18, 19, 20 years, some of those early properties. We went through a big refinance earlier in the year. We took not every, but most of our 5 units and above and refinanced them, put a long-term debt on it, like, did a
Individually, or a portfolio loan, or what?
portfolio loan. And it improved our cash flow like crazy. It was a great deal. But the idea was that, well, if I'm going to to refinance these properties, I need to mentally remarry these properties for another 10 years. Based on prepayment penalties, yield maintenance, whatever is involved with those properties, there's not a quick out. So that left some properties that I've got a bunch of equity in, but do I enjoy these enough that we keep running them, or do we go ahead and sell those, or if we refinance them, I mean, you can still pull money out. You're not as married to it if it's not like in a Fannie Freddie or CMBS type loan. So I think for us, it's remaining flexible. I mean, I do get excited about, hey, if there is a downturn in the market, or the real estate market slows down, hey, maybe there's going to be some more opportunity. So I like that idea of being able to acquire assets, small and large, at a discount. But I'm just trying to keep an open mind to seeing what types of opportunities come up, because, this past year we did a lot of syndicated deals, and we still bought some properties on our own, and all were, fulfilling for different reasons. So, but I'm generally not going to just jump up and buy a single family home anymore. And I don't think I would, unless there was, a compelling reason, if it was a vacation home or something like that. So just trying to keep an open mind. I mean, if we get into this if there's like a crazy amount of foreclosures, I might do what I did in 08, 09, 2010 and buy a lot of those. And this time, maybe not hold them, but, get into the, flip them. But I always want to remain flexible to sort of adapt to what's going on in the larger economy, and not really timing the market, but just making sure that we have capital and time and resources available to take advantage of whatever the market is. But I think we're going to continue to do both. I mean, syndication's great, and as that keeps developing, we can get into bigger, even bigger and better properties.
Yeah, love it. And, I want to be respectful of your time, so we'll start winding down here in a minute. But I'm curious your thoughts and experience as because you've been very focused geographically in your backyard for the most part. I mean, you you get into the Cleveland side, and you're, based in Erie, Pennsylvania. So, maybe an hour or two radius around your, where your home base is, as far as what you've been investing in, but you've also done some stuff outside of your local market. What was that experience like, being so focused geographically and then doing your first maybe deal that was outside of that initial geographic focus?
Yeah. I mean, I think for years, I just wasn't thinking big enough. So there's this idea that, well, I'm going to get into Cleveland or Pittsburgh or Buffalo or whatever it is, but I was thinking, hey, I'm going to go and buy a 20 unit. How the heck am I going to manage a 20 unit an hour away? It just seemed like a nightmare to me. But as I started syndicating, and it was syndicating locally in my own backyard, but got involved in various group, masterminds, made some friends in the business where I'm like, well, wait a second, I can buy 100 units, I can buy 200 units, I can buy multiples of those, and I can manage that, or we can hire a third party manager, and I can still get really nice ownership, get a say in how things operate. So I just didn't, maybe 5 or 10 years ago, 15 years ago, didn't really understand those concepts. So we were focusing in our backyard because that's what we knew. And we got to a point where we started running out of deals to buy. And, Erie's not that big of a market, and there's still some opportunities that come up here and there, but not very often. And so the types of properties we want to buy now, just, you might be able to pick up one or two things a year, if that, maybe once a year. And that's being generous. So start thinking about these other markets, and the same things I like about the Erie market. There's countless markets across the country like this, where, we might not be catching that wave of like high price increases, but we're not going to get slaughtered in the next downturn either. Mm-hmm. And that's why I love Cleveland. That's why I like some of the markets that we're in Texas and Oklahoma. And it's just, boring is good in certain regards. I mean, maybe we're not taking deals full cycle. Like some of our friends in the business have been able to take multiple deals full cycle in a short time. And I love it. I mean, I love seeing these guys, these people are they're making tons of money. But I like to invest for the long term too, and say that, hey, 5, 10 years, 20 years, 30 years, I think that my investments will be concentrated in real estate in some shape or form. So I want it to be in a market where, my risk is hedged. Maybe we're not having, big equity growth, but guess what? We're not going to get slaughtered, in the next downturn either.
Yeah. Love that. Well, look, I've really enjoyed our conversation today, and thanks for backing up and telling us a little bit about how you got started in the space and how you've grown your business over the years and what you guys are focusing on today. I want to be respectful of your time and start to wind down here, but I've got a few final questions for you. The first is, what's the biggest challenge that you've faced on your multifamily investing journey that we could all learn from?
I think the biggest challenge, or one of the biggest challenges, is just getting out of my own way. There's a point, I think, with a lot of entrepreneurs where you want to have your hands in everything and you want to control everything. And I think, as a business owner, you need to set the tone for your business and set the culture and set the pace and not be afraid to get your hands dirty. But at the same time, you need to hire people that are, equally as good at, or hopefully much better than you are at various tasks. And so I think that was one of the biggest, hindrances to growth, was just realizing that getting the right people, and not just having warm bodies, but people that really actually care about doing a good job. And that's probably been the biggest challenge. And once we get better at hiring, the growth became so much easier.
Yeah, I love that. What's the biggest win you've had on your real estate investing journey so far?
I don't know that I can count any one win, but I think a couple of things stand out to me. I mean, number one was, being able to leave my day job. So I had a very, lucrative career, had made a lot of money for a number of years. And it's the type of job that, people can get settled into and make a long career out of. So being able to walk away from that to do what we do in real estate, that was a big win for me. But I think even bigger, kind of, it's not one event, but just the growth that we've been able to experience since leaving that job. And I kick myself sometimes. I'm like, man, what we've done in the 9 years since I quit my day job. What if I quit my day job 5 years sooner? What if I took that leap and had that confidence in myself? So really, it was just being able to leave. But, because all the time, like, people will hear this. I mean, your listeners will hear, if they're thinking about quitting their day job, their banker will tell them, there's all these people that'll tell them that they won't be able to get loans, that they'll be unbankable. That's all hogwash. I mean, you can, you are your only limitation. So I think for me, that's the biggest thing that I learned, was just that, the world is wide open when you leave your day job. You just have to have confidence in yourself.
Love it. Last question for you. And I believe you have kids, not sure their ages. But if you were giving some guidance to, not necessarily even your kids, but someone who's getting started in this real estate investing space, what's the best guidance or direction or advice that you would give someone to set them out on the right path?
I think two things. I mean, the first is just never give up, because it's going to be hard, especially when you're younger and people don't take you seriously yet. Eventually they will. Eventually, either you get old enough that you're being taken seriously, or you're making, moves and people take that seriously. And the people that count are the ones that are going to take you seriously. So I would say, don't let adversity get you down. Like, this is such a giving community. So this dovetails into, when you're starting out, surround yourself with others, whether it's joining a mastermind, if you can't afford that, but online meetups, in-person meetups, join landlord groups, whatever that is, find somebody that owns real estate that's 2 or 3 times your age, offer them to buy them lunch, take them out for coffee, and learn from those that have been down that path that you want to go down. And I think finding those mentors and friends in the business is the biggest thing you can do, because eventually people get old and they want to sell their property, or they get tired and they want to sell their property, or when you're young and starting out, Jake, you can just be a fly on the wall and learn from others. And the more you can do that, I mean, everybody can afford a cup of coffee, so yeah, if you're starting out and, you're not, you're making $10 an hour or $15 an hour, you can still afford to you don't have to buy coffee for yourself. You can buy you can get a water and buy coffee for the mentor, $3-5, whatever it is, but you can do that. And that's such a huge investment in your time. And I think spend your time learning from others. That's the biggest thing that anybody starting out should do.
Great advice. Great advice. Well, look, Jason, I appreciate you coming on, sharing your journey with us, and giving us some insight into how you've really built an incredible business, an incredible portfolio. What's the best way for our listeners to connect with you, learn more about what you have going on, and maybe even participate in one of your future opportunities?
Sure. They can hit me up if you want to put my email in the show notes, jasonperro@yahoo.com. You can find me on LinkedIn, Facebook. Go on my website. You can register as an investor. Happy to even set up a strategy session with any of your listeners if they're just getting started in the business, or they're already investing and they just want to run something by someone who is an impartial third party. Always happy to take some time to talk real estate with anybody.
Love it. We'll have that info in the show notes. Jason, again, thanks for coming on. Thanks for sharing your journey with us, and I look forward to connecting with you again soon.
Thanks, David.